Mr. Baig, what is the estimate that you're throwing up? Because 6.1% is the number that we're working with, and while that might be an envy for most developed nations, it in fact would be the slowest pace in 3 years, and you have a slew of concerns that are likely to drive growth lower this time around. But what's the estimate that you're working with?
Very similar to that. We're looking at maybe 0.1 higher than what the census is. So 6.2 perhaps, but there's a margin of error around these estimates. So if it comes out a little below 6 or closer to like 6.4, I mean, it's I think all the same. It doesn't really matter. The fact of the matter is the January-March indicators by and large are already available to us. It's hard to see how the GDP number can change that story one way or the other. We had lackluster performance on the industrial production side. Perhaps we'll get a decent number on the agriculture side. In between something fairly par for the course on the services side. All in all, below trend quarter, but I can't really see the GDP number coming up with a big surprise one direction or the other.
Right, and Taimur, going into the new financial year, that's FY13, what's the worst case scenario you're penciling in for India? Assuming we do see a Grexit or a Spexit as it's being called, or a complete breakdown in the global environment, what's the worst case number that you'd pencil in for India?
I mean, it can easily be, testing low sixes for the rest of the year or even go below that. Mind you, the Indian economy is far more correlated with global outturns than it used to be, both the financial markets as well as the real economy. So 5 years ago, this event would have had far less of an impact or implication for the Indian outlook than it does now. So if we are going to, for example, revise down our growth forecast for the US and Euro area by about 1 percentage point for the coming year, that would automatically cause India's expected growth rate to fall by 0.5 percentage point or higher. So from expecting 6.5 to 6, just like that from the external side, if not worse. And then, of course, as you have talked about in your program earlier, there are many domestic headwinds as well.
Right, Taimur, we'll come back to you in just a moment. Manishi, I'm going to just pick on the comment that Dr. Sen made about the government choosing not to poke its nose into pretty much every issue. But do you believe that, the corporate sector, and I'm actually, Mr. Rathi's comments will also be interesting on this. Do you believe that the corporate sector somewhere is a little disappointed that the government is not poking its nose enough into a number of issues that it would like to see traction on?
Do you believe that the pain is going to last now for coming quarters? Because we've been talking about what the FY13 estimates are. Goldman Sachs saying 6.6%, 6.5% from Bank of America, Merrill Lynch. And as all of these growth risks take center stage, what kind of policy action are you anticipating?
Well, not a whole lot on the monetary policy side. Perhaps some liquidity provisions, but not more than that, given that inflation is also a very big drag to the overall stability of the economy. So I think the action has to come from the fiscal side. Whatever there is planned in terms of expenditure on productive areas, they have to be executed in an expeditious manner, but at the same time the government has to reduce wasteful expenditure and keep the subsidy budget under track. So I think the most important thing at this point is to revive expectations, and the way you revive expectations as far as consumption and investment is concerned is by carrying out measures that the market has been demanding, whether it's a diesel price adjustment, reduction in subsidies to bring the fiscal deficit down, which then has an impact favorably on the current account. That would be step one. Step two would be to liberalize the external sector for foreign direct investment. Again, one area where we could see quite a bit of enhancement in expectations, and so on and so forth. So I don't think it's really a mystery as to what is expected and what is required for the growth picture to turn around.
And Taimur, just one very quick word from you. On the investment front, how worried are you about the contraction that we've been seeing in the past quarters?
No, I think it's as an unmitigated negative as far as the growth outlook, growth potential, all of the above. And I think in there is no mystery as to why investment has been slowing. Corporations are seeing very high costs. That is a deterrent toward investment. So therefore, bringing down inflation is imperative. And at the same time, there's a lot of regulatory uncertainty and there's been some policy setback. Resolving those issues would be helpful toward investment as well.
All right, Taimur Baig, we leave it at that. Thanks very much for joining in with what you make of the 5.3% Q4 GDP numbers.